The broadcast is now starting. All attendees are in listen-only mode.
Hi everybody. We're going to get started in just a couple minutes. Thank you for your patience. We're going to get started in just a couple minutes. Okay, let's get started today. Good afternoon and welcome to Gray's update on new overtime regulations. I'm Frank McLaughlin and I'm a manager here at Gray. I cannot stress enough the impact of these new overtime regulations are going to have on employers and employees across the country. They will affect hundreds of thousands of business owners and millions of employees. The new regulations will reach many, if not all, industries and need to be considered on how they will impact business. This is not something that is coming way down the road. The regulations take effect on December 1st of this year. So today's webinar is a timely one. We'll have just a few months to make preparations and adjustments to deal with regulations that were only finalized and announced just a few weeks ago. I want to stress that I am not a labor attorney and cannot address possible legal interpretations of the new law. But I am an accountant and I can definitely speak to the effect the overtime rules will have on your payroll cost, how they will affect your business, and steps you can take to minimize the impact. So please know that today's webinar will offer you an accountant's perspective, and should you need legal advice, feel free to contact me after the webinar, and I'll be happy to refer you to we currently work with. That, in a nutshell, is what we'll cover today. How the overtime rules have changed, what the new rules might do for your payroll budget, and how to adjust and adapt your payroll strategy in the face of this new reality. So let's begin. So what are we going to cover today? We're going to cover the current law as it stands today, the upcoming changes to the law, how to calculate your business impact, and then a business case just to kind of put numbers behind how you would calculate it for your business. We're going to talk about the current law because I think it's important to know what the current law is to see what has changed and how it's going to impact you. Before I kind of get into the current law, I want to talk about exempt and not exempt. That's really at the crux of what we're talking about. Non-exempt employees are considered people that should be paid overtime. So anyone working over 40 hours would be paid overtime because they're a non-exempt employee. An exempt employee is somebody that would not be paid overtime working over 40 hours. So whenever I'm talking about overtime in this presentation, talking about working over 40 hours. So what is the current law? The current law has 3 tests to it, right, to determine whether someone is exempt or non-exempt. Again, exempt is somebody that you do not have to pay salary, or not pay overtime. So how do we get to that exempt piece? So here's the 3 steps to that test. We have a salary basis test, which is pretty straightforward. It's a predetermined amount of money that you would pay an employee regardless of quality or quantity of work. So I'm going to pay you $1,000 a month. It doesn't matter how much I'm working or the quality of my work, I'm going to pay somebody $1,000. Pretty straightforward. Salary basis test. The second test is the salary level test. This has been around since 2004. Right now, it currently stands at $455 per week, or $23,660 a year. This is an important test because this test allows us to do 2 things. We can determine if anyone's getting paid underneath this amount, they are automatically not exempt. So that's why that salary level test is important. Anything paid under that amount is automatically not exempt. If someone's getting paid over this $23,660 amount, then we have to go into our third test, which is our duties test, which I'll get to in a second. The other piece of this that you should know is a highly compensated employee. That's an HCE that you see there on your screen. Right now, that is stuck at $100,000. If you are paying someone over $100,000, they are almost always exempt, and you would almost never have to pay them for any hours worked over 40. So now let's go to the duties test. What is the duties test? There are 3 different pieces of the duties test. The duties test has an executive, administrative, and professional levels. Professional is, I think, pretty much the easiest to wrap our heads around. That is somebody that goes to school as a learned degree to get into an industry. That are lawyers, accountants, doctors, right? So if you're in these professions, then you are almost always exempt for the duties test piece. So if you're paying someone over our salary level test and you're a professional in these professions, then you would be exempt from being paid overtime. Then we have 2 other pieces, and that's executive and administrative. So executive and administrative, I like to break it down this way. Administrative, think of yourself really quickly as you have 3 business units. You have unit A, B, and C. And your administrative person is not an admin assistant. This is somebody that is making significant decisions for your business. They have the judgment to do so. So for A, B, and C units, this administrative person is somebody that has control over all the units. They're overseeing all of it and making sure that all 3 units are working and doing everything they're supposed to be doing. Higher level, almost a senior management type situation. An executive, and this is just to paint the picture, is running the Unit A or Division A, right? So they're running that group, that location, to make sure that it's running effectively. They're hiring and training. They're firing if they need to. They're running that group or subdivision of your company. I hope that gives you kind of a nice little piece of it, but administrative is at high level, almost your COO, CEO. They're looking for your whole business. Executive is running a division or managing a division. When I talk about executive and administrative and the duties test, I want to just stress to you that the law as it states says they have to be doing these duties primarily most of the time, right? So primarily they have to be doing this executive or administrative type work. So if you're just thinking of it as 100, we have 100%, they have to be doing this type of work 51% or more to be past the duties test. Because we all know that it doesn't matter if you have a manager, they sometimes get down to the trenches, do the work that, your staff or, some of your lower level employees are doing. It's just they have to be doing these executive and administrative type works, more than 50% of the time. It has to be their primary duty. So that's kind of really quickly what the current law is and how you determine if someone is exempt or not exempt. So the first step is that salary basis test. I'm paying you a predetermined amount of money. The second is, are you over or under that salary level test? And the third is, if you are over the salary level, are you doing one of these 3 duties primarily most of the time, right? So kind of that's the conceptual way. If you hit all those pieces, then you have an exempt employee. I'm going to kind of stop right here because I think it's important to note that if for whatever reason, what your employees are doing, I think that we have to take a look and step back and say to ourselves, what are our job descriptions? Do you have job descriptions for each of your levels? Do you have a management job description, a supervisor job description, an employee job description? Because one of the first things the DOL would do if they were to come in and do an audit all of these overtime rules is they're going to say, please give me your job description. So I just want to kind of a little bit of a takeaway is make sure your job descriptions are up to date, make sure they're proving out that they're doing executive, administrative, or professional work most of the time, and just make sure it's relevant and it's accurate. So just a little quick takeaway, if you haven't done job descriptions in quite a while, I'd say let's revisit those and take a look at them. And if you don't have them at all, I would definitely take some time and think about coming up with some, because I think it will really help if that situation ever were to occur. So again, right, we have 3 levels, 3 tests: salary basis, salary level, and the duties test. So what is the DOL trying to do? Right, the DOL is trying, and I read the 98-page proposal, and they say it right there in the summary version of the proposal. They think this is going to impact 4.2 million employees in the United States. It's going to cost employers about $250 million a year, and over a 5 to 10 year span is going to transfer income from employers to employees in the tune of $1.1 to $1.2 billion. Okay, so these are huge numbers, and that's why it's important to kind of understand all this, because we need to try to mitigate some of these costs. And so I just want you to kind of think of this is where they're coming from, and we have to try to make sure we can mitigate some of those things. The top bullet point there, tied to percentages. This is important, and we're going to really kind of dive a little bit deeper in the next slide. But just know that what the DOL is trying to do is tie that salary limit to the 40th percentile, that salary level to that 40th percentile, and then highly compensated employee limit to the 90th percentile. And I'm going to talk about in the next slide why that's so important. So what are the changes to the law? The salary basis test, that first level of the test, doesn't change. The duties test, that third and final piece, doesn't change. It's the salary level test. And the salary level test has changed. It's going from $455 per week to $913 per week. And it's going from $24,660 a year to $47,476 a year. This is slightly above a 100% increase. This isn't huge. This is the piece that's going to impact that 4.2 million employees that the DOL wants to impact. Because now, like I told you, right, we're at this salary level test. If you're paying anyone under this amount, $47,476 a year, they are automatically non-exempt. So they now need to be paid overtime. So this is where it impacts you, and understanding that number is important. Just for simplicity's sake, I'm future of the presentation, I'm not going to say $47,476, and it's a little old and cumbersome, so I'm going to say $47,500, just to kind of keep us in the loop of what we're trying to say, $47,500. The other thing that's happening is highly compensated employees is going from $100,000 to $134,000, so just about a 34% increase from the old number. This is also huge, because remember, it used to be $100,000. If you were paying anyone $110 and $115, they were almost always exempt. But now, because they're in that $34,000 range, we may now have to prove that they're paid. We have to prove that duties test. So now we have to bring in maybe a whole new section of employees. So knowing that is important as well. Two things that have changed with the law, other than the amounts in the salary, right, is the automatic update of salary every 3 years. So on January 1st, 2020, we're going to update. And guess what we're going to update it to? We're going to update that minimum level salary test to the 40th percentile of January 1st, 2020. Okay, so let's just pretend for a second we're 3 years down the line. That new level can be $50,000. It could be a little bit north of that. It could be south of that. But this number is going to change. This is not static. The old limit, that $24,000, was static. It hasn't changed since 2004. So it's important to know that this is going to change every 3 years, and most likely, and because if we're having this huge jump and we have to make all these decisions, this is probably going to increase 3 years from now. So as we go through the next 3 years, are we keeping up to date with that 40th percentile? Are we making sure our people are being paid above or below that, and what are we making sure they're doing? So something to consider, and make sure you're always on top of that 40th percentile. How highly compensated employees, same premise, that's going to be tied to that 90th percentile. So that could be $140,000. You understand the idea. But keeping up with that to make sure you're doing everything in your power, that you're not running into a little bit of another scenario or situation 3 years from now. And then the last piece that's changed, and this is a huge change, is that bonuses and incentive payments are allowed to satisfy up to 10% of the salary. That get to make sure you get over that $47,500. So huge. This was never allowed before. It didn't matter what you paid your people in bonuses. It didn't count towards that $24,000 from the old level. So now we're able to use some bonuses, but we can't use more than 10%. So if you think about it, that in a really simplistic math equation, if I'm paying someone $45,000 a year, I can use $4,500 to get me, and that number right there is $49,500. If I add the two together, I'm over the threshold, so I can utilize those bonuses to make sure I get over that $47,500 threshold. There's a couple little nuances, and let me just stop for a second and kind of take pause here. This is brand new when it comes to, and they're supposed to be non-discretionary bonuses. So these are bonuses that you've laid out to your staff, your team, and said if you hit metric A, B, and C, we will give you $1,000, $2,000, whatever that amount is. So you need to make sure that it's a non-discretionary, and it has to also be paid at minimum 4 times a year. It has to be at least paid on a quarterly basis. You have to pay it, you could pay it more than that, but you have to at least pay it on a quarterly basis. So this is where I'm going to kind of say we have a little bit of a scenario and maybe a situation where we could find ourselves into a trap. So I'm going to, let's just have a scenario out there. I have somebody who's making $44,000 a year. I can pay them $400 in bonuses, $1,500, right? But I pay on a quarterly basis, and they have to hit these metrics. Okay, so the first quarter of the year, they hit their metric. I pay them $1,000. The second quarter, now, right, hit their metric. I'm giving them another $1,000. So now they're up from 44 to 45 to $46,000. Third quarter comes around. They hit their metric. They have the $1,000. Now they're at $47,000. They're just under that that new level limit. And guess what happens? Fourth quarter isn't as good. They don't hit the metric. You could find yourself in a situation where you may have to go back and recalculate their overtime. Okay? So if you're going to utilize bonuses and incentive payments to satisfy part of the level test, make sure you're giving yourself a cushion, or writing in that you're allowed to, if they hit it three quarters out of the 4, working in some other way to make sure you can get over that limit. All right, it's just another situation to think about, because I don't want you to be like, oh, we can do this. You could run yourself into a little bit of trouble if you don't, make sure you're doing it correctly. So that's the new law, right? We talked about the salary basis not changing. The salary level, huge change, over 100% on the 40th percentile, the salary level test, and just above 34% for the highly compensated employees. So now what do we do? And how do we kind of see how we can mitigate these costs? So I kind of laid out a step-by-step process on what are some of the considerations, some of the things that we can do to see how it would impact our business. So step 1, how many of our employees are salaried? Pretty straightforward, right? How many are salaried? Step 2, do these employees make more or less than $47,500 a year? If the answer is they get paid more, then we can remove these employees from the cost calculation, but you'll see here that they're getting moved to step 4 because they should still be considered, and we'll talk about that at step 4. And then if you have employees that are paid less, we have to move on to step 3, which is really getting down and dirty into the numbers to see how it's calculated. So let's calculate the cost, right? We know how many employees we have that they're getting paid under our $47,500 salary level test, right? What is the average amount of hours these employees are working over 40 hours? If the answer is you have no one working over 40 hours, then this isn't going to impact you, right? But if you do have people that are working over 40 hours, we need to think about, okay, how is this going to impact us? Now, this is a little difficult, right? Because some businesses, some industries, I'm paying you $50,000 a year. There's no time entry. You don't know exactly how much. Maybe they're answering emails. How do you determine all that? It's a little bit hard to decipher what those numbers are, but you have to do your best kind of guesstimate on what are the usual hours that they're working over 40 hours. Then we got to find the hourly rate of the employee. We're going to multiply that rate by 1.5 times for our new overtime rate. And then what we're going to do, we're going to multiply that average amount of overs over 40. So let's just pretend really quickly to give you an idea where the person works 45 hours a week. Their hourly rate is $20, right? And we're going to multiply that by 1.5. So their new overtime rate is $30. We're going to multiply that 5 hours over 40 times our 30 hours. So it could cost me $150 extra per week to pay that person the new hourly rate that I have to because they're over that 40-hour work week. And then we just add their base salary to that calculated overtime amount, and you kind of have what the impact is going to be. Like I said, this is kind of hard to visualize. That's why I have kind of a visual representation of what this all looks like, just to give you an idea where maybe you could fall in line in some of the things that we can do. So, what's our step 4, right? I talked about it on step 2. Anybody making over $47,500, we should move to step 4. We have to take into other considerations. Capital. What's our spin look like? We have, let's just, you have somebody that is making just under $47,500. You've made the decision, I'm going to give them the raise over. This person hasn't been with you as long as the person above the limit. What does that feel like? That person usually has a little bit more of an understanding of your business and experiences. So taking into consideration, what does that compression, how does it feel to some of your employees that are right over the salary level and right under it? And then what if somebody's well under the limit, right? And they're working a lot of hours. Now we have to figure out, they're going to get a lot of overtime if they're working a lot of overtime, where it doesn't matter what we do, we can't just give them a little bump and get them over. So that's a huge compressing piece. How do we deal with that? Spin. All right, so I say spin, but seriously, let's talk about it. I mean, when you're talking to your employees and you're going to give them maybe a 5, 10, 8% increase in their salary, how are you going to spin it so business instead of just, the law says I have to pay you this? So how do we spin this as a business decision that makes it for the person, because they're valuable to us, the human capital is valuable to us. We're trying to spin it into the way that we want to. So thinking about how does it feel to your employees, which are most of the time the most important aspect of your business, just as important as making financial decisions. And then step 5 is we're going to make the decision. So what do we do? Are we going to give them the raise? Are we going to try to filter in new staff people? Are we going to hire a new employee to just kind of break it down so that I don't have anyone working over 40 hours? A lot of different things that we can think about and kind of come up with our mind to figure out what we're going to do. So let's just stop here. Unfortunately, any decision you're going to make is going to cost you some money. It's just what is going to cost you less. But we always have to think about our human capital. You're between a rock and a hard place. You and your people are stuck in the middle. How do you make this all work? So now I'm going to go through a kind of a real life scenario, if you will, and kind of walk through that. So here's the scenario. I'm an owner of a business. I have 3 business units. So I have 3 offices. I have 3 divisions. I have 3 restaurants. I have 3 locations. You get the idea. I have 3 salaried employees at each office. I have 1 employee making $50,000. I have 1 employee making $45,000 and 1 employee making $1,000. And all my employees work on average 45 hours per week. All right. So that's what I kind of came up with on. That's what they're really doing, but that's kind of the scenario I'm laying out in front of you today. So let me just kind of stop because I think I'm missing. I didn't state one thing, and there is no rule in the DOL that says you have to, make sure time is scheduled and calculated any specific way. It's what works best for your business to tally up that time for your employees. So whatever scenario you're working with, that's probably fine. Some of the issues that we have here is we have to train some new people that maybe never had to record their time before. So think about how it's going to impact some of those people. How are you going to train them? What is that training going to look like? What is that new record keeping going to look like? So just a couple other little things to think about is how do you track this time now, and make sure that if you're going to pay them overtime, that you're paying them the right amount. So that was just a little quick aside, but back to our scenario: 1 employee, 3 employees, 50, 45, and 40, and they work 45 hours per week. So my step 1, I have 9 salaried employees. 3 of my employees make over the $47,500. I'm going to skip right over to step 4. 6 of my employees, sorry, not 10 of my employees, make less than $47,500. So 6. 3 of them make $45,000. 3 of them make $40,000. Let's calculate how this is going to impact my business. So, like we stated, they all work about 5 hours extra a week over 40 hours. So how do we calculate that overtime rate? So we're going to take that $45,000, divide it by 52 to get our weekly pay rate. So $865. We're going to divide that by 40 hours in a week. That's going to get me to $21.63 an hour, and I got to multiply it by 1.5 times to get our overtime rate of 32.45. So I just want to say this pretty quickly. This is a really oversimplified scenario. This is, there's other ways to kind of manipulate the numbers to get them down a little bit. Would love to talk to you guys offline on how to do that, but this is an oversimplified scenario. So this is just straight up, hey, if I were to do it this way, this is what it would cost me. So then we're going to calculate that overtime rate for the $40,000 employee. We're going to divide it by 52 to get the weekly amount, divide it by 40 to get the hourly amount, multiply it by 1.5 times, $28.85 an hour. So then we have weekly and yearly additional costs, right? So we're going to take $32.45, that new overtime rate. We're going to multiply it by those 5 hours they're working overtime. We're going to get $162.25 a week. We're going to multiply that by 50. I take 50 because, a couple vacation weeks in there. And that equals $8,000, a little over $8,000 in additional cost. Then we're going to do the same with that $40,000 employee. We're going to walk it over to our weekly amount times our 50 weeks. It's going to cost us just over $7,000. So what are these going to totally cost me? So I now have the $45,000 employee making $53,000, right? And that person is making $5,600 over the salary limit. Okay, so I think when we get to the next slide, you're going to see that's a pretty easy decision to make. Then we have a $40,000 employee plus their overtime. They're just underneath that $47,500 salary limit. So what are we going to do there? How are we going to do that? Because that is what is that? I didn't do the math. That's a 17.5% raise for that employee. Not something that I think anybody wants to do. That's that compression we're talking about. So let's get off to the next slide. I see there's a bunch of questions. I'm going to try to get to them at the end, but just let you know I do see them, and I'll see if I can take them. I may have to take some offline. One looks pretty long here, but I'll see what I can hit and touch on, and maybe we can get back with each other and take some of those questions offline. So then we have step 3 continued. We have that $45,000 employee. I think it's a pretty easy decision, right? We're going to give that person the raise and get them over the $47,500. It's only going to cost me $2,500. It's going to save me about $5,600 because that's what the overtime would have been. Now I know that there's other things that we can do. I'm just saying real simplistically, if we did nothing, this is how much it would cost us. So it would cost us $2,500 for every $45,000 employee. A pretty simple decision. But what do we do with the $40,000 employee? We can't give him the raise. We're not going to give him a raise because it's actually going to cost us a little bit more money, right? But the total company cost is going to be about $7,000, a little over $7,000 an employee, right? Which we talked about was 17.5% increases, right? Then for the 3 units that I have, it could cost me $21,000, $22,000. Pretty impactful stuff for that lower person that's just a bit away from that $47,500 limit. So let's just pretend for a second we're going to, we have a couple options. We can just pay them and say, you know what, I can't come up with a better option. We can add a lower level employee or add employees to make sure we're, but the hours still need to be associated with. Time you're adding a lower level employee, it's going to take a little bit longer time. And I used $15, pretty simplistic dollar amount per hour. You're going to multiply that by the 6 hours it takes them. So that's $90 per week times 52. It's going to cost you $4,500, $4,600. So you're still costing yourself a pretty good sum of money, but you're saving just about $3,000 a unit, a restaurant, an office. So that's one option. And then the one option I do not have here, and it's something that I want to talk about, is you're able to, let's just pretend somebody does work 45 hours a week. There is a way that you can say, you know what, I still want to pay you $40,000. What you do is you do a back-ended calculation where you have, all right, they work 40 hours at this rate, they work 5 hours at that rate, which after I do all the math and get there, I'm going to get, for the whole year, they're going to make $40,000. So in theory, could have an impact of $0 to you. Now this has other implications that you need to think about in the other consideration point, but one of them is that, in theory, what you're doing is you're lowering their hourly rate to make sure that they can get back to the $40,000. And if somebody is working 40 hours and that rate is close, and you're doing totally different jobs, you're having some compression issues. So there is a way to get them there to make sure that it has no impact, but you still may want to give them a little bit more money just to make sure that there is that gap, there is not that compression, and you don't have that hurt at a human capital level. So the total cost, we go from about $30,000 down to $21,000, but what we talked about, it could be as little as $2,500 because all we did is we bumped up the $45,000 employee. Now I just want to stop for a second here as well. One of the things that I've gone through is I have not calculated in any fringe benefits. I haven't calculated in payroll taxes. I haven't calculated in insurance. I haven't calculated in any other benefit that you provide, 401ks and the like. So that's usually somewhere, depending on what you have, it's 15-20%. So any dollar you're spending, you're really spending 15-20% more than that. So my number is purely a cost of payroll, but know that those other costs are out there. So it could be significantly higher by 15 or 20%. So just kind of know that it's not just a one-to-one. You have to kind of think about that other stuff that you do provide for your employees. All right, and then we have step 4. We're going to take in other considerations. How are we going to make up those hours if we decide that we want them more? Right, do we have to hire more people to diversify out and make sure that we're keeping everyone at 40? What is that conversation going to look like? Can we spin it? Again, this is a legal thing that we have to deal with, but how do we make it work to our advantage? How can we talk to our employees and say, you're not getting this raise, you're not getting these bumps because of the government, it's because I want you to, it's what's right for the business. So thinking about the human capital aspect as well, and then again, I'm going to just harp on it because I feel like it's kind of a big deal. Most people nowadays, unfortunately, talk about their salary and what they make for compensation. So the second somebody knows that that compression could hurt your organization, so make sure that you're really thinking about everything. You're not just thinking about the pure dollars. So step 5, we got to make the decision. The employee's close to the $47,500. I think it's easy. If they're working abundantly more than 40 hours a week, you're easily going to make sure that you're going to give them the raise over. You don't have, it's just going to make your life a lot easier. It's going to be, it's just an easier decision. It's those people closer to 40, under 40, just above 40 that are really going to give you some issues, especially if they're working overtime. Just to give you a little bit of an idea, talking in the accounting industry, we work during tax season, and those 10, 15, 20 hours per week, we have to be very close and careful about what we're doing here and how we're approaching this situation. So it's important to kind of get through that. The good thing here is, right, is that we have until December 1st to figure this out. And we have the ability to kind of go through the process. So, like I said before, I would take away 3 things from today. The first thing I would take away from this is that update your job descriptions. If you don't have them, create them. It's good to have, and make sure that you're ready to go there. The second is getting to work on the calculations. What are they actually working in overtime? What is the actual cost to me? What is going to cost if I did nothing? If I just said, we're just going to run our business the way we did, what's that going to cost me? And then the third is, how do we figure out, okay, we have a couple months, let's implement a new staff person. Let's implement new procedures that allow that no one can work over 40 hours. Let's see how that impacts the business. So I would say, step 1, job description. Step 2, let's get to work on calculating the cost and the impact, and in step 3, let's put it to work. Let's see if it works for my business. Some of the situations aren't going to work for what's right for your business, but you need to check it out. You need to see and try those work. Those are the 3 things. Again, I'm pretty much done. I have a bunch of questions here, so I'm going to try to read through them and see if I can answer them. But really, it's getting to work, because we do have just under 6 months before this comes into play. So let's see what we can do, mitigate some cost, make this a best case scenario or the best case of not a great scenario. So let me go through questions now. Would it be legal to raise employee salaries to $47,500 a year, but eliminate any health insurance costs that I contribute to their insurance cost? So that's a great question. That's going to come down to what happens with Obamacare, what you're going to do in that situation, where you kind of land with what with your penalties, working, so kind of going through that. What's the penalty situation going to look like? Because now you're not insurance when you had to before, right? So there's a lot of different scenarios. Bring in, Obama DA into the mix. So really something you need to think about holistically if that's something that you want to do. But to answer your question, which I believe is, could you do that? Yes, I'm pretty sure you can do that. You can remove your health care, but that's going to have other consequences that you need to think about. Can you get a PDF of the slides? Yeah, I think everyone that's on today's webinar will get a actual a YouTube link or another email that kind of you can go around and see everything and see the slides, so you'll actually absolutely get that. Can you salary someone at 40 hours and set number of OT hours? Yeah, so that's kind of what I was talking, maybe Yep. So maybe I try to answer that question a little bit through when I was going through my presentation, but yeah, there is an availability and the option to say, you know, you're going to get paid 15 hours or 20 hours, right? For the first 40 hours, you're going to get paid 30 hours for the next 5 hours that you're working over 40 hours, and that's going to come out to, I didn't do the math, but $50,000, right? You can play it in there so that you can put that in there. You absolutely can. You just have to, I would talk to your legal team or legal advice, because it's got to be written up a certain way to make sure that it's copacetic. So you can do that. Just make sure that you're seeking out legal help on that one. Can employees bank OT for use at another time? The answer to that is no. So the way the DOL works is that you're living in a 1 week period. So they pretty much work in a 1 week period. So 40 hours. So the second they work 41 hours in that week, you're hitting, and you have to pay someone for overtime. There's no banking. It's kind of a week to week type thing. So you kind of have an overarching kind of thought process and philosophy on that. I'm considering a large employer, but I can just contribute. Have the employee pay 9.5 of their gross pay for Obamacare, but they would. Right. So that's the health insurance come back around. But I like to take that one offline with you, because I think that there's a couple different things that we can do, and really look at it from the perspective of what can we get away with. I don't have any other questions. I think that says it all. If anybody has any questions after this, you have my contact information right there. Please feel free to reach out to me, email me. Love to take it offline. Every is different. There's a different way to every one of your businesses. So love to talk to you. And if I'm not available, there's everyone at Gray that can help with this process. So have a great day, and thanks for listening. Enjoy.